Hey, everybody. It's your boy, Sean McLaughlin at Options Sean on the old Twitter X. Today is Wednesday, November 26, 2025, the day before Thanksgiving. Normally, we do the All-Star Options Jam session on Thursdays, but tomorrow, A, the market's closed. B, none of you will be paying attention because we all got family stuff going on, at least if you're in the US, right? So, welcome to an early version of All-Star Options Jam session. What we do during this session, for those who've never been here before, is we review action in the portfolio, positions we've entered or exited, positions we've exited, whether for a profit or for a loss, or any adjustments we've made. So we'll review all that. We'll update some stops on some existing positions to lock in, some gains or at least minimize potential losses. We'll review any new positions we've put on over the last week, and then of course we started all off with just kind of a high level overview of what's going on in the market. And let me bring my chart up here. Let's start there with the S&P. This move we've had over the last 4 days, it's more dramatic when I look at some individual stocks, but this to me feels like finally, we've been here before, but finally we're getting that the ignition of the end of the year face ripping, performance chasing rally that I think we are in store for this year. I've been feeling that all autumn. My thought on that was tested over the recent weeks. I thought when the S&P rallied here at the end of October, I thought this was the ignition right here. It quickly faded, and that felt like a bad sign to me. But the way we've been trading these last 3 days tells me that the face ripper rally is back on the table. And let me just, for argument's sake, let's bring up a couple tickers that I'm positioned in other accounts. But just to give you an idea, I mean, look at some of these charts. So these charts, here's KSS. Look at this thing ripping. Look at this rig breaking out. Look at Pan American Silver ripping. Look at Hecla Mining. Look at Tiva. I mean, do these charts look like charts that are just starting to rip? Do they look like they're taking off? Look at this, Armin. This is a mining corporation, EQX. This is a gold. I mean, so a lot of metals here leading my tickers today, certainly. Sibanye Stillwater ripping, Wayfair. I mean, look at these charts. Every one that I'm showing you here, guys, are charts that are really breaking out. So I think when we bring the S&P back up, when you look at the S&P, it doesn't look as dramatic here, but we're seeing some leadership really start ripping in a lot of these high beta names. And that's something that's got my attention. And that makes me think that we might be in for a face ripper rally into the end of the year. So let's review what has happened amongst some positions this week. Positions we've closed. We've got a mixed bag. We got some winners. We got some losers. We got a celebration. Let's start with the celebration in no particular order here, but let's start with the QQQ. This is a trade I lost money on, and I'm happy that I lost money on it. This was a hedge. I mentioned it when I put it on the day that I put it on, when I put it on back here in mid to late September. I said, guys, I'm putting on this QQQ hedge. I'm buying long puts to bearish trade, and I hope I'm wrong. I hope I lose money. Because if I lose money, that probably means the rest of my portfolio either did well or certainly did not have any kind of calamitous situation, right? And the market was going higher. We had a couple days here, like on October 10th, we had that kind of 1 day sell-off. I was feeling pretty good about having my puts. That made me feel a little bit easier about my position. And then most recently, as early as late last week or early last week, the end of the previous week, I was feeling real good. These puts finally went in the money. And I was like, oh boy. I mean, my portfolio was taking a hit and that sucked, but these puts were cushioning the blow and I was happy to have them on. Luckily, well, not luckily, but expiration day was the day following this big red candle. And so I was forced to exit the trade that day. I would have probably still had this on if they had more time to expiration, but I had to exit the trade here. I was able to get $8 for them. I paid $16.40. I got out for 8. To me, that feels like a win. I was prepared to lose everything in this trade because it was a hedge, right? So the hedge served its purpose. It gave me a little bit of comfort during a couple scary momentary sell-offs in the market. And that's the whole point of a hedge, guys and girls. It's nice if you make money on a hedge, but that usually means something else is going terribly wrong, right? So it's better to lose money on a hedge, but it's nice that we had it on. All right. Moving on, let's go to Lyft. Lyft is a trade that just completely made us look like fools, or at least made me look like a fool. Thing rolled over from the day I got in. The day got in, I bought on a dip thinking I was getting a gift buying that dip. Well, you know what? That dip was just the beginning. This thing has done nothing but go down since I got in. These were June 25 calls that I paid $4.25 for. I got out of them earlier this week at 2:35, or was that Friday? I think that was Friday I got out at 2:35. So we're out of Lyft. Similar story. Well, not similar. This one didn't make us look like fools originally. In fact, this trade was looking pretty good for a while. We were long the December 300 calls we got in July. It was looking like a nice steady winner, riding that 50 period moving average higher, lending its support. But when that 50 period moving average broke for good, that was pretty much good night, Oscar. We had to close this thing when it broke the 284 level, which was my updated stop loss level. And I got out for 75 cents. I paid 525, got out for 75 cents. So not a full loss, but pretty close to it. But hey, we're getting close to expiration, right? These expire in December. So no surprise that if we get stopped out heading into expiration month, there's probably not much premium left in it. And that's the case here. Finally, let's end on a positive note. IBM. This is one of these trades that we put on to help ride out this portfolio volatility, or I should say market volatility, the choppiness that we've had over the last few weeks. I put on an iron condor, which is a delta neutral trade. When you put a delta neutral trade like an iron condor on, you are betting on a range holding. You're betting on the stock or the ETF not going too far in either direction, just kind of chopping around in the middle. And that's exactly what IBM did. We sold this iron condor with December options for $1.95 on November 14th, I believe. And we closed it yesterday. No, we closed it. Yeah, we closed it yesterday at 95 cents at our profit target. A best practice for me when I do iron condors, this is not true for everybody, but this is true for me. When I could buy it back and close the position for half of what I sold it for when I put the trade on, that's my profit target. I'm not trying to be greedy with this things. I want to take the easy profit. Nothing's easy, right? I shouldn't call it easy, but I want to take that early profit, the easier part of that profit, and not sweat out the last nickels and dimes and quarters, right? I'm holding too much risk for too little reward at that point. So I'm going for a high probability gain, taking half of the profits when I get them, and I'm out, right? So I sold it for $1.95, closed it for a 95-cent debit. Winner, winner, chicken dinner. That's why we do delta neutral trades, to take advantage of sideways markets. We have a couple others on too. This is just one that hit our profit target. Others are getting close, and I'll update you on those as we get there. All right, let's now update some stops. Okay, we have 3 to update. Last week we had none. We updated no stops last week, which I think I'd have to go back and check the records and check the archives, but I think that's the first time that's ever happened in the many years we've been doing this show. I think that's the first time we didn't update a single stop on a show. But we're back to normal here. We're raising our stops in no particular order here. Here's ATEC. This is Alpha Tech Holdings. We're long some April 20 calls. Stock broke out to new highs, or at least new highs for us today, this week. So I'm raising my stop to 19, which is just below this consolidation post. I believe this was an earnings breakout. Don't want to see ATEC get below 19. Any closing price below 19 at this point will kick me out of this trade, hopefully for a small loser if that happens. All right, next up, Rio Tinto. We're along the March 75 calls for 260. I like the way this has been trading this week. It's not quite back to new all-time highs, but it's getting there, or at least new 52-week highs. It's getting there. Maybe I'm jumping the gun a little bit, but I'm moving my stop up to 67.50. Looking at this chart and looking at this range, I don't want to see Rio get below 67.50. That would also mean it's below its 50-day moving average. I don't like that. So 67.50 is the new stop in Rio. So far, so good in that trade. Lastly, Ralph Lauren. This trade is turning into a monster for us. Not a monster. It's a bull call spread. Our upside is capped, but we're getting close. We're getting close to our profit target. We bought this for $17.25 back in the summer. July 18th, we're long a February 300, 350 bull call spread. That means I'm long the February 300 calls and short the 350 calls. The most that spread could be worth is $50. That's the difference between the strikes. I'm going to try to sell this thing for 40. I think we're getting pretty close right now. I haven't looked, but we got to be getting pretty close with both options well in the money at this point. So if you're in it, great. If you're in the bull call spread, consider taking profits when we get up, when the spread's worth around $40, in that neighborhood. You don't have to do it exactly at 40, but consider taking profits, because you're risking, if the spread's worth 40 bucks, you're risking all 40 of those dollars to make an additional 10 at that point. And I don't like that math. But we're raising our stop now to 320 in Ralph Lauren. I don't want to see Ralph Lauren come back below 320 before I hit my profit target. That would be a bearish development for me and for this trade. And so 320 is the new stop loss level for Ralph Lauren. Okay. I feel like I've been going fast. Have I been going fast? I apologize. Maybe I had a little extra cup of coffee this morning. Okay, so that's the updated stops. Let's quickly review new trades we've put on. And as I say every week, the details for these new trades can be found at allstarcharts.com. Head to the members section, head to the options section. You will find a detailed trade plan of every trade that we put on in All Star Options, every trade, and that includes the strategy, what option strategy we're employing, why we're employing that strategy, how I'm going to manage risk, where I may or may not take profits, where I will get out to take a loss. All of that is in there. You know what? I just noticed I don't have Oklo in here. I'll add that in a second. But in Microsoft, we put on a bullish position in Microsoft, a mildly bullish position, a conservatively bullish position. So far, it's working. Again, find those details on the blog. And then the other one, let me add Oklo here. So I didn't have this in here. Oklo. We have a delta neutral trade on Oklo. Well, it's not exactly delta neutral. It's delta neutral with a little skewed upside. We're playing for a little bit of upside, just not too much. But really, we want Oklo to stay within the range of these bounds here that I've got highlighted on the chart. I'm betting that at least for the next few weeks, Oklo is going to stay north of 70 and above and below 140. Again, all the details for that trade can be found at allstarcharts.com. All right. So as I always do, I like to share you guys this screen for those who like to take screenshots of the updated stops. There they are. Take your shot. Pause if you need to. Great. All right. And lastly, I'll just leave you with this. If you're watching this show for the first time and you're not a subscriber to All Star Options, now's a great time to become a subscriber. We got Black Friday sales going right now all through the weekend. If you're not involved, get involved. You can go to stockmarkettv.com/get All Star Options. The link is in the chat. So feel free to jump into the chat. Stephen Roman, my man, I see you in the chat. How you doing, buddy? Let's hang out. Steve's a local guy to me. Harminder, good to see you, buddy. You always give me love whenever I appear online. I appreciate it. I'm grateful to you. I'm grateful to all of you who watch. Happy Thanksgiving for those of you who celebrate. And look, take it easy. Enjoy some family time. Enjoy some downtime. Invest in yourself. Invest in your mental health. Read a book. Go for a hike. Hit that gym one extra time. Do what you need to do to get yourself right, because I'm telling you, the best investments all of us traders can ever make are the investments we make in ourselves. So do that. And hey, maybe an investment in All Star Options could be an investment in yourself. All right, folks, have a great holiday weekend. Enjoy the food, enjoy the football, enjoy the family, all the F's. Enjoy them all. I will see you when we get back next week. Take care, everybody. Happy Thanksgiving.